Welcome to TradeNBI.com. This is John. This report is for the 16th. Well, that's where that ABM yellow is a beautiful line below there. I'm comfortable being short, particularly when I have NBI white leading. Yes, I still have cyan under red, so it's one of those where you're cautious with it and you don't get out of control, but you're nonetheless poised to take advantage of dips that take place. Despite when we were in the super bullish areas, you don't even think about that because there just isn't enough short activity to create any momentum. But as you can see, pre-market, pretty good move so far. And actually, let me put that back up there for a second because I think it's great because then you know that at the 75 level, you're likely to get potential bounce back. But if the readings continue to deteriorate intraday, uh, you got a good shot of reaching your ABM green. And within this 100 to 76% range, you're going to get moves back and forth between that. The real question was, would we get magenta below yellow? And that is a significant one, particularly below the 33 level. Next, if magenta drops below the 25, then you should expect much more likelihood that we're going to reach down towards that 76% range. So that becomes the critical view. And then I also look at my shakeout there. If I'm going to dip to negative, would be the key to any sustained downside move. So just worth keeping a note of it. You can see we've got the same move here taking place now in the NASDAQ, which was much more robust in that we had the magenta well above um, any short activity, and that pretty much just changed rather quickly. Now, seeing this right now, given where things are, it could change intraday. We don't have magenta under yellow for the NASDAQ at all. So it's sort of that transition period, and I think that's where playing with the ABM, uh, stands for Advanced Baseline Matrix, lets you have ranges within this gap of space uh, to play within the the various range. From a treasury standpoint, no activity. Again, a lot of what we're seeing from the Fed's reaction stuff and that is about liquidity in the banking system and the fact that it's drying up quickly, and you can't tighten under those conditions. However, you've got inflation, but as long as oil stays in check, you can get away with it. The issue becomes if there is a spike in this based on continued activity in the Gulf area. Um, it could have real implications as to what the Fed can and can't do, and whether things spiral. We know their bias is going to be towards softening and easing credit, particularly going into the election year, as we've just had our first caucuses in Iowa, and that's going to really, everyone says the Fed's not political, but well, they have to live in a political world, so they are. Uh, just deal with it. And the soil situation is fairly benign at this particular stage, and the question on that one is when you look at China and some of the other issues with growth and demand, is there a fall off? And that becomes a real question of economic viability. And we know that the full value of rate hikes are really starting to have their bite about now. So this is where it begins, and we'll see how much further that really starts to take its grip. Euro is way elevated for where it should be. It's impressive that they've been able to keep it up at this level anyway. All of this was as a result of the idea that the Fed was going to ease, but that doesn't change the fact the Eurozone is a disaster. So to deal with that one. Gold, rather muted. And interestingly enough, I mean, you have central banks buying up gold every which way, and that hasn't created too much of a move because of the paper derivative that has been created. And this is something I talked about when it came to Bitcoin futures. The excitement and exuberance everyone had when you had just a one-way action from Bitcoin. You either owned it or you sold it. Once futures were created, it created the opportunity to actually short against something you didn't actually have, and that moved it more towards where they were, playing gold. Now, of course, the whole ETF hype in that created the, big rumor, and then the news started to get there, filling back to its 50%. This is not that big a deal, and the reality is these positive extremes getting filled is actually more healthy than not. So still, right at its 50% on the rising 0%, which does pull price towards that level. Um, and it's still at a soft point here with MBI White leading. So there could be some additional breaks of that. ETH much stronger from its standpoint, but it was pretty far behind. So it's caught up to parity from a relative strength standpoint, and certainly looking much stronger than Bitcoin. Just from a reading standpoint, you can clearly see that from MBI relative reading there. From a 50K standpoint, pretty minute situation. With holidays and everything like that, you get the tiny little miniature trade in between there, and boom. All we've done is just really pretty much come back to the baseline of the breakout that took place. It wasn't under positive extreme, so it wasn't that relevant. Um, but overall, that weakness with the dip below the red line on the extreme of that. So we'll see if this is going to play forward and create a little bit of early year profit taking, so to speak. When we look at it from an intraday standpoint, not a whole lot of anything. And when we move into the post market here, you can see that's where most of the dip in the European session is taking place. And it's resolving itself and potentially should come back up into that low 4,800 range here, unless that magenta fades off pretty quick, and that would give another move back towards the zero. We'll see how it plays out, but I think you can start to see the beginnings of the potential for a little bit of an adjustment into some of the super positive belief that the Fed cuts were going to, materialize in a huge way, and that it was going to make some massive alteration. It's not the case. It's more of a defensive play, I think, pretty much from a internal situation with the liquidity and the whole bank repo. We're not going to get into any of that stuff because it's not relevant to most people, and it's complicated nonetheless, needless to say. It's going to be an interesting one as far as the availability of credit and not having the simplistic ways of just free money. Some of these businesses and that have been, struggling, even with low rates, are not going to be doing as well going forward. And as we get into, coming earnings and that, it's really going to be reflective, and we'll start to watch for revisions and things like that. But we're going to see it all in the readings prior to. So we'll just go with what our signals are. And as always, anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.